Hi, I'm Wayne Martin with Real Estate One, and I have Pete Metz with Vaughn Mortgage here. We're going to do a real estate wrap-up of what happened in June, and now we're in mid-July, and it's going to be an interesting market.
Yeah, it is, and it's been going really fast this year.
It's gone really fast. Yeah. You were in Costco.
Yeah, I was at Costco, and they already have the Halloween stuff up there.
Right, in July.
The Halloween costumes, in July.
In July. Yeah. August will be into Christmas then. Yeah. The year is moving along.
Moving fast, yep.
Very fast. Well, let's talk a little bit about statistics overall and what's going on.
Yeah.
We can just even talk about what happened in June, and then we'll talk about year to date.
Mm-hmm.
So, market statistically, we closed 221 transactions in June, which is a seasonal uptick from what's been going on this year, about 6%. It's kind of jumped.
6% higher.
6% higher.
In closed transactions.
In closed transactions than the month previous.
Yeah.
Inventory in months, it just depends on the price range you're in, but it's more of a buyer's market now, even though there isn't a lot of inventory.
So what do you mean by between the sales price you're in? Tell us more about that.
Okay, so one of the things that we do in Real Estate One is on a monthly basis, we actually publish a report, and we break down the market on $50,000 increments from basically $100,000 up to $1 million. And so you have to look at which price category you're in. So let's take a look at hot market, which would be $250,000 to $300,000. In June, there was 25 sales. $300,000 to $350,000, there was 28 sales. And then let's go to $350,000 to $400,000, there was 32 sales. So it's an active market where most of the buyers are. I mean, there's buyers basically in every category up to $1 million, but there's just not that many sales.
So most of the transactions are happening in that price range.
In that price range,
yeah, and that's where the buyer's market versus seller's market, it's more competitive for a seller, is what you're saying.
Yes.
Yeah.
In order to be competitive, though, it's kind of interesting. Even though we don't have a lot of inventory, there's not a lot of good inventory. And so what we're seeing is, in these statistics, these are the only ones that have sold. We're not talking about all the listings that didn't sell, that got canceled or withdrawn.
Yeah.
And so what happens is, if we're working with a buyer, the buyer doesn't have a lot of selections a lot of times, and a lot of times the sellers have the sugar high from a couple of years ago when interest rates were 3%. It was going crazy, and the market blew up, and over a 3 or 4 year period, prices went up 20%. Well, those days are over.
Yeah.
And actually, there's a analogy of the market's like a rolling rock going down the hill, and for the sellers, they're used to the rock going up the hill. Well, those days are over. So the rock is kind of going down the hill, and if you're a seller, you need to get in front of the rock to catch it. You can't be behind the rock trying to grab it as it's rolling down.
The rock is the market.
And the rock is the market.
Down.
And it's rolling down.
So if you're a seller,
slowly.
If you're a seller, you have to get in front of the...
You got to get in front of it. And we could talk about how you do that later, but let's just really talk about buyers right now.
Okay.
Yeah. So what are you seeing? Interest rates, what do buyers need? What are the different things that are happening in your world?
For buyers right now, I think a lot of the questions are, the payment. It's the
always
same.
the payment.
It's always the payment. Where's the monthly payment? If you want to buy a home right now for $300,000, if you're a first-time home buyer, that payment's going to be about $2,400 to $2,500. Now that payment has been the same now for about almost a year and a half, 2 years.
Right.
For $300,000. What's interesting is, yes, interest rates haven't come down, but income has actually increased.
Oh, wow.
Right?
So that's
and
good.
So that 2,500 is a little bit getting better. So that's the good news. The good news is it's staying at that 2,200 because interest rates are still around that 6.5
Right.
to 7%, and it's fluctuating right in there. So,
Right.
if we're talking buyers, the average first-time home buyer is 36 years old, and it was about 22% of the market
Okay.
for June. And nationwide, not
Nationwide,
for
not
Reading.
Yeah.
Not for Reading. But there's still a decent amount of demand for people wanting to purchase. But I also think that there's a lot of people just still on the sidelines
absolutely.
waiting for that payment, be able to get that payment down, have more affordable payment.
Right.
Over time, like if we go out into the future, if we go out 3, 4, 5 years, and let's say interest rates stay at 6.5 to 7%, well, the homes are going to become more and more affordable.
Right.
And the reason why is, as long as we don't have the huge appreciation, and the reason why is because income's going to continue to rise.
Right.
Because you have income increasing, and so
Right.
that payment gets easier and easier and easier.
Gets easier and easier. Oh, yeah.
Yeah.
That's
Yeah.
definitely a historical fact.
Yeah.
The other thing, too, watching the economics and not to really get into politics, but you just look at the trade deficit fight that's going on and the uncertainty, it's really affects the marketplace right now. Just the uncertainty of where's it going to go, what kind of inflation we might have.
Yeah.
So I do a lot of open houses and talk to people all the time that are buying and selling. And that seems to be one of the overall themes, that we're looking for consistency.
Yeah, we really need consistency. We really need the certainty. That's what
certainty.
People want certainty.
We
They
need
don't-
certainty.
If they get confused or if they're not sure about the future,
Right.
then they're not going to do anything.
It's an easy no.
Yeah, so we really need that certainty for sure, and the back and forth of this, and rates did jump up and down when the tariffs when they started talking about
Right.
them. Interest rates were on their way down. They were at we had year lows, meaning it hadn't been this low for almost
For a year.
Yeah, which was great, and we started to pick up a little bit of refinances, and then all of a sudden the tariffs popped, and then
Right.
rates ticked back up
Right.
to where they were again. So yeah, we do need a lot more certainty, and
Right.
we need consistency and certainty.
But that's also something that can be good for the buyer today, in a way. So when you look at it, if you're in a place where you can afford a home, you can go out and find the right home. Might take some work, There's different ways we structure deals at this point. Because there could be a little more flexibility with the seller. We could get some accommodations from the seller on closing costs, different things, in order to make your deal work, right?
Concessions, yep.
Yeah, concessions. So that's, the thing that's good about it is eventually rates will probably come down. Now, we don't have a crystal ball. We don't know. But when we talk about rates coming down, what does that actually mean, Pete?
When rates come down, like
what would that even look like?
if
In a good economy, what would the rates potentially be? Maybe a year or two out.
Yeah, because we have so much people on the sideline. We do have a lot of people on the sidelines, and rates coming down. I mean, if we see 1% interest rate drop, you're going to see a huge surge of buyers coming in, and it's not going to just be the first-time buyers. It's also because that payment.
It's
okay,
everybody.
Let's say, Wayne, the rate goes from that 6.8 down to, let's say, 1% lower to like 5.8 or 5.75. Well, that means that $2,500 payment for a $300,000 house is going to be more like $2,200.
Right.
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 So it's a $300 a month savings for that same house.
Right.
And so that that's more affordable.
Correct.
So people will be jumping in, and we will see a pop in appreciation because of the demand, and we're going to have an inventory challenge like we have had before.
So supply and demand, a year and a half, 2 years from now, real estate prices will probably move up again.
If we see rates,
any lower movement in rates for period of time.
And I don't think prices are like, I mean, maybe certain neighborhoods here I don't think prices are coming down right now. I think if you look at the entire market, we see.
It just depends on your price category.
It depends on the price category, correct. And, in a couple of years, that's the demand, you have a lot more people wanting to get in. Yeah.
Right.
Yeah.
Right.
As far as my, you're asking about interest rates, for interest rates to come down, we just need inflation to get better, and we need, lower inflation. Inflation has been getting better, has been coming down. And the one thing that's been hurting rates, and as of late, is like what you're saying, the tariffs. Because tariffs, they do potentially raise the prices of the home. Prices of the goods and services. Correct, but it is only a one-time increase, right? Tariffs.
The question is, will income, recapture that increase? Will income go up to recapture that? That's basically it.
Yeah.
So but the thing about real estate, they're not making a lot more of it.
They're not. No.
I just watched a great program by the mayor of Costa Mesa, and one of the things that he talked about, he's a developer too, is the problems that we've had for development has been astronomical, especially in California. Not just California, but a lot of times it's California, because we've had CEQA, which is, if you're a developer, which my past life was, I was a developer, and you would have to do all these environmental studies, and you could get tied up for long periods of time. Well, it looks like the new CEQA rules will not allow that the cities have to push things through.
Good.
Yeah. So that's a real plus for the developers that want to take a risk, go out and build more houses. Mm-hmm. And actually that could really help lower new home prices potentially.
Yeah.
I mean, it just depends on inflation, because when you look at, what goes into the home, when you build a home or the economy's good and people are rebuilding their homes, and it really drives the economy.
Absolutely.
More so than a car.
Yeah, because you have everyone, you have the title company, you have all the realtors, and you have
all the subcontractors.
The furniture companies make the money.
Copper, you got plastics, you got appliances.
And then when you buy a house, statistics say after you're buying a house, within a couple months you go out and you buy a new car.
Yeah. Or and you're buying furniture.
And buying furniture.
Yeah.
And
do not buy the car before the house.
Correct.
Yeah.
Correct.
Go out and find a beater that's reliable.
Yeah.
Buy the house and then go buy your Ferrari.
100%. Yeah.
Right.
Yeah. Yeah.
Yeah. So, it's kind of interesting. Yeah. So, from a lender standpoint, you're helping people. As a realtor, what do I need to know to be able to get the buyer a really great deal, from your perspective?
Good question. On the loan side,
okay.
You have basically, picking the lender is very important. Picking
Absolutely
a local
important.
lender, someone that's going to be competitive and someone that knows what they're doing, and someone that's knowledgeable and can close on time and all of that good stuff. Go ahead.
Yeah, I want to bring up one more point. They need to be local with a track record with other realtors.
Yes.
That is a big plus.
Yeah.
So you want to use somebody that's really good locally, not using this big internet, like, I'm getting a loan through whatever company, internet company, because you don't always get what they're telling you at the close.
Correct.
Right. So
100%.
The other side of it is, if I know, like, I get an offer from Pete or some other lenders in town, I can go to the bank on that because I know the due diligence has been done.
Yeah.
And also they've worked with the buyer to the point where the buyer knows what not to do to make sure that loan's going to fund.
Yeah.
Right.
Yeah. Absolutely. It's huge to work with someone that knows what they're doing,
very reputable
and reputable, has a good reputation. The other thing I would say is someone, recently, in the last 2 or 3 months, I actually posted my interest rates on my website.
Oh, great.
So being very transparent with the interest rate, and for a long time I never did that, but I do feel conviction that that's something that buyers want. They want that transparency and not have to call around, and they go right to my website and see exactly where my rates are at.
Right.
Yeah. And so having that transparency, and really, if you're in the market, you can also follow the interest rates pretty easily on my website as well.
Oh, okay.
If someone has a price range, they can see where rates are, calculate the payment really easily. And you can do all that right online, which is obviously really nice.
Yeah, and if they wanted to, they could even start an application online with you. They don't have to necessarily come to your office, right?
No, they don't have to. Of course, a
Right.
lot of people do because it's a big financial decision.
Sure,
There's a lot to
which
talk
is
about.
great.
Yeah, and so absolutely, you can start that way as well, and start online application.
Right.
Yeah.
Yeah, the thing that I really like about working with you is a lot of times people will have a little nicks in their credit, or they're off a few points. Talk about how you can help them clean that up, and how that works to make a better loan for
Absolutely.
themselves.
One of the part of our process in helping our customers is to start with a soft credit pull. It's not going to put a ding on their credit, and it allows us to have kind of like a secret look on their credit to really help them maximize their credit score for them. I mean, they're about ready to go in and buy the biggest purchase they've made in their life for a very long time.
Right.
They're borrowing money for a very long time, and so it's important and it's smart to make sure that we can maximize their savings by helping them with their credit. So what does that look like? We look at the credit and we say, okay, here we see some credit cards. A lot of people don't realize this, but your credit fluctuates every single month. It goes up and down. So when we look at the credit, it might be during a time when you just bought a purchase and you have a credit card that's a balance of $600 and you have a $700 credit limit. Well, if you're close to that limit, your score is going to drop maybe 50 points, and people don't realize that. You pay it back down to $100, all of a sudden your credit score jumps up another 50 points.
Wow.
So knowing that and actually helping customers understand that, and of course we'll do that before we lock in their interest rate, make sure we get the highest credit score so that they can get the best and save money on the mortgage insurance, save money on the interest rate.
Right.
So there's a lot of savings that go into looking at the credit and making sure we do help them in that way.
Yeah. One of the things that I've seen in the past is, if somebody has a credit score of like 600 and they really need to be up at what would be the minimum like FHA score?
620, 640 you want to try to get to.
Try to get 640, right?
Yeah, 640, yeah.
So with somebody that's knowledgeable, where you can pull their credit and go, do X, Y, and Z, it can do a rapid rescore sometimes pretty radically. Yeah,
so we're not talking, months to help you maximize your score. We're talking days. So we can do what's called a rapid rescore. So what that means is, if someone was to pay off that $600 balance down to $100 again, they would get a 40-point increase. Well, we don't have to wait, 30, 60 days for them to update the credit report.
Right.
We're going to send that new balance from the customer. Just give us show us the new balance. We send that to all three bureaus for them, and within 1 or 2 days, they'll update the score immediately for them.
Oh, wow.
Yeah.
So that's really kind of interesting.
Yeah. It's a great tool, and it's something that we do, and we're happy to do it.
Yeah, and so if you don't know anything about your credit, but you would like to find out. Pete can do a soft pull if there's some dings and stuff.
Yeah.
He can show you the way to build credit.
Yeah.
And I've seen people go from a horrible credit to, over a period of years, up into the 800s.
Yeah.
Because they understood the game.
Yep.
So like if you have a credit card, one of the things that my wife and I do is we never let the balance go over 50%, and we might have a small balance. We may not pay it off because it actually gives you more credit, believe it or not.
Correct, yeah.
But not going over certain limits is super important.
Yeah.
And you need credit. For all you people that don't have credit, what's your advice?
My advice, if you do not have credit, there's one of two ways to get a credit score. If you go and open a credit card, it's going to take 6 months for you to get a score.
Oh, okay.
It's going to take at least 6 months for that credit score to establish on your credit. So, do that as soon as possible and do that. If you need to get a credit score right away, there's other things that we can help you with, to get that credit score up quicker.
Okay,
And
like what would that be potentially?
So if you have a family member and they have a credit card, you can go on as an authorized user with a family member, and that family member obviously approves, and you go on as an authorized user. Well, the credit bureaus, they'll update your score immediately.
Wow.
Because of the established credit with that other credit card, it's already has established long-term credit with the other person. So if you go on as an authorized user, now some credit cards don't actually report to the authorized user on their credit. Most do.
Oh, okay.
Most will do that, and so it's a way to rapidly, but really, I would say go open up a credit card. Go get a credit card.
Yeah.
You don't want to rely on your friends or family member or someone to go on as an authorized user. Go get a credit card. It takes 6 months for you to establish credit. So if you know that you want to buy a home in the next year, go get that credit card.
Right.
Yeah.
And pay your bills. Never be late.
Start establishing that credit and put your payments on auto pay.
Yes.
And just because one 30-day late on a credit card, your credit score could be 700, 720. You have one 30-day late. If you only have maybe one or two credit cards, your score will drop down to like 580 to 600. It's a huge ding. It's actually worse on your credit score than I'm saying just points,
Right,
the
just
number
points.
of points than a bankruptcy. A bankruptcy is not as bad as a 30-day late when we're talking points. We're just talking the points on the credit card. Yeah.
Yeah, if you've had a bankruptcy, there's periods of time before you can really get a loan.
Yeah, correct.
Yeah.
But a
But time
30-day
marches
late,
on too, if you can rebuild it.
Absolutely.
Yeah.
Yeah, absolutely. So I do have a question for you, Wayne. So we were talking about the rock going down. So what are some of the
Right.
things that sellers can do to get in front of that rock?
Well, number one, if you're thinking about selling, you want to interview a reputable agent and really take a look at the market. There's a couple things the way I look at it for the seller that's important is what's sold, because if you're going to get an appraisal, you got to know what's sold because that's what they're going to use. And then the other thing for going to market, we really need to understand who you're competing against. Not just what's sold, because that's a lesson in history. And if the market's moving down slowly, we need to get in front of that boulder.
Yeah.
And so we have to really take a look at the competition of who's going to be your competition.
Yeah.
How do you become the obvious choice in that market segment?
So let's say you have a house, you're going to list it for, let's say, $500,000.
Right.
Well, what other homes are listed for $500,000?
Exactly.
And what amenities do those homes have compared to your house?
Exactly.
The house that you're listing. Yeah.
Does it have a better floor plan? Is your floor plan superior?
How many bedrooms?
How many bedrooms? What's the property like?
Yeah.
Does it have a pool? Does it not have? Does it have a shop?
Yeah.
Does it have marble
Deferred
or granite?
maintenance.
Has it been remodeled? How old is the roof?
Yeah.
How old's your roof? If your roof is within a 3-year period of being replaced, that's really going to affect the sale. Because the buyer, if they're with a decent realtor, they're going to go, can you afford to replace that $15,000 to $20,000 or $30,000 roof?
Yeah.
It just depends on the size of the house and the complexity in that. So those are some of the things we look at. If they have decks, they're a big deal, because if you have a pest report that's bad, then and you don't know about it, and then you get into escrow, it's a big deal.
Yeah.
So there's all these different things. So to kind of circle back around, what I recommend for the seller, and for some reason Shasta County has not been used to this, but in many areas, if you're going to go on the market, you want to get a home inspection, you want to get a pest inspection
Prior to,
you probably want to have your HVAC unit checked out, tuned up, those
It's
things.
so smart because it's so smart because you'll know what's wrong and you can go
Right.
fix it and get ahead of it.
You can get ahead of it, or you can
Sell
go
it.
out and get bids if you don't have the money
And
to
present
do
that
it.
to the buyer.
And then we can present that to the buyer. Then there's no confusion, because a confused mind says no. Or if they say yes, they're going to take a big discount on you,
Yeah.
the seller.
Yeah.
So we want to work to really understand the nature of that property. The other thing that's very important is understanding fire insurance. The seller has to be aware of the buyer is coming in, and their fire insurance may not be as good as their current
The
fire
ones
insurance
that they have,
policy.
correct, yeah.
Right. So we need to understand that. We need to take a look at the property. Possibly, if you're in the county, have Cal Fire do an inspection. They're actually fairly lenient, but it has to be it has to be done. It may be just limbing the trees up, 8 feet, taking brush away. There's certain things that they're looking for that really can affect your fire insurance rates.
Yeah.
If you live on a canyon, do you have a lot of dry grass that's tall? We're just getting a listing, and they had 3-foot high, dry grass, and so for a couple $100,
Get it all
they
mowed
did
down.
almost an acre.
Wow.
But that's all important, and so prepping your home, that's stage one. Understanding where your property is. Stage two is making it presentable by we have a professional stager that we work with as a consultant, and to go through the house and rejigger all the things on the walls and all that, so it looks like a model home in the photography.
Yeah.
And so that's very important too. And I kind of like to give everybody a free pass. So take all your stuff, box it. You're going to be moving, put it in the garage, or get rid of it. A lot of times we have a couple estate sale people. We have a window of time for estate sale, and they have decent stuff. Or we have garage sailors that will help them, and then we have people that will actually take stuff to Goodwill, Discovery, all that, and then finally, when that's over, then it goes to the dump. So,
wow, I understand what you're saying. So. Really, they just have to do their due diligence with the seller, with the market, doing their due diligence, knowing and
knowing your house, knowing your house, and knowing what your competition is, and the things that I'm seeing somewhat. I don't know if you're seeing it in your world, but occasionally we have appraisers that they're following the trend of the market. They're not marking stuff up. They're actually going the other direction.
Correct.
I just talked to an appraiser this last weekend.
Market, they make a market adjustment.
Yeah, they have to make a market adjustment for the banks. So, being realistic about, what your home is really
Do you want me to explain what that is?
Yes, please.
Okay, so when you get your home appraised, and this is for a refinance or a purchase, doesn't matter. The appraiser, if you have a market where you're appreciating, and the previous comp sold, let's say 3 months from today on that, then comparable. Previous sale, it sold 3 months from when he's appraising that home. Well, in 3 months, the market could have appreciated. Right. And so he's got to make that adjustment. It might be 0.5%, might be 0.2%. During COVID, it might have been 1% for 3 months. And so he's going to make that adjustment and increase the value of that compared to the property he's appraising. It actually helps your appraisal. The opposite is true in a down market. Is if the last 3 months the home prices have softened, then he's got to make that adjustment down as well.
Correct.
Yeah, and we haven't seen adjustments down, in a while.
Right. No, not for years and years. But it is. I've just seen it. We've seen a couple transactions that there was a minor adjustment, and you just kind of go, well,
Yeah.
But it is what it is.
Yeah.
So if you're a seller,
I imagine that was a higher priced home.
Yes.
Were they higher priced homes? Because
we're
not seeing that on lower.
No, you don't see that on the lower ends. If you're where you really see it is when you have rural property and a big home.
Yeah.
You can see it kind of roll back.
Yeah.
Because fire insurance.
You have a lot of headwind against you. Fire insurance, affordability.
Affordability. Yeah. But it's kind of funny though too, because I've seen some properties, $1 million property sold in a day.
Yeah.
that's an anomaly. But,
Yeah.
the good properties, if they're the obvious choice, the best value against their competition, and there's buyers in that segment, it will sell.
Yeah.
But there's all these other properties that languish. I mean, I look at the hot sheet daily now, and I look at all these withdrawals, all these expires, and then I call them up, looking for my buyers and to see if, we can make a deal or whatever. But they're just very unrealistic about what their house is worth.
Yeah.
And I've seen deals go south just on like a few $1,000s. I'm not selling for that. And then they go, oh, I wish I did.
Yeah, because the rock's farther down the hill.
Farther down the hill, and they're trying to chase it down.
Yeah.
Got to run past it and get so you
Yeah.
can catch it.
Yeah.
Yeah. So it's an interesting marketplace, and it'll be interesting to see how it evolves in the next 6 months to a year. So I'm hoping that we get some stability in the marketplace with the tariffs.
Me too.
Get some good press. Employment. What's been happening with employment? It's been nationwide pretty good.
It's been, according to the reports, pretty good.
The reports.
Yeah, the reports. I personally don't know if I trust the reports, but according to the reports, our unemployment rate has stayed around that 4.3%.
Okay.
And which it's been staying there, right there, and every month we think it's gonna, somehow. I won't get into that, but
right.
Employment seems to be pretty strong still.
Yeah.
Yeah.
Well, that's good.
Yeah.
Yeah. All right. Well, if you would like to get a copy of our monthly reports, and you put out reports to emails.
Interest rates and stuff.
If you're interested in what we do, we'll have some information below the video, and you can get a monthly report. We promise not to harass you, but if you would like to sell or buy, we'd love to hear from you. Help you get through that and understand it at least. And reach out to us. We're more than happy to answer any question you have. No obligation, right?
Yep. Thank you, Wayne.
Thank you, Pete.
Yeah.
And if you want to really check out interest rates, go to
check out the website.
Check your website.
VaughnMortgage.com.
VaughnMortgage.com.
Yeah. All right.
All right. Good seeing you.
You too.
Thank you.